Hey y'all, it's Lainey Wilson. St. Jude gives kids with cancer the chance they deserve. Families never receive a bill from St. Jude for treatment, travel, housing, or food. But we can't help these kids without you.
This holiday, help St. Jude find more cures for more children. Donate now at musicgives.org.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons right after Guy Benson and just before the 790 KABC News Blitz with Randy Wang at 5. Mottek On Monday, live on the air, 790 KABC. Streaming live online worldwide at KABC.com. The on-demand Mottek On Money podcast, KABC.com, Apple iTunes, YouTube, all your favorite podcast platforms. A Hollywood ending on Wall Street to wrap up the week with a big deal focused on Hollywood. Netflix agreeing to buy Warner Brothers Discovery Studios and streaming business in a deal valued at $83 billion. This is a mammoth deal. Wall Street Journal notes it's set to reshape the entertainment and media industry. Warner Brothers shares rallied on this news. A Warner Brothers Discovery stock of $1.54 to $26.08. Shares in Paramount Skydance, which was also vying for Warner Brothers, sank nearly 10%, down $1.46 at $13.37. Investors now await the next move and reaction from Washington, which has to sign off on this deal. The overall market moved higher today, with the Dow closing up 104 points at 47,955. The S&P 500 of 13 at 6870, and the Nasdaq gained 73 points at 23,578. Looks like the Dow getting close to its all-time high, which was just above 48,000 a couple of weeks ago. The Federal Reserve focused on the last inflation reading to think about before their big rate decision next week, and it's widely expected the Fed will be cutting rates again. We got what we're told is the Fed's preferred inflation gauge, the PCE, showing price pressures accelerating slightly in the month of September. That index rose 2.8% from a year earlier, and that pretty much was in line with analysts' expectations. The yield on the 10-year note ended the week at 4.14% after the largest one-week gain since April. Cryptos have been all over the place again this week, Bitcoin dropping below 90,000. We're at 89,276 on Bitcoin. Taking a look at the price of gold, which also made a move on the upside this week, right now at $4,227 and change, down about $15. And coming up later this hour, I'll be speaking with the biggest name in the world of economics and finance, economist Dr. Mohamed EL-ERIAN, chief economic advisor at Allianz, former president of Queens College, Cambridge, former head of PIMCO in Newport Beach, and author of numerous books, including one focus on the Federal Reserve titled The Only Game in Town. Of course, the Fed will be meeting next week. We'll be talking about that with Dr. Mohamed EL-ERIAN later this hour. Important parts of the big, beautiful bill pushed by the president and passed by Congress this year are about to kick in as 2026 approaches. I'll discuss what's happening with the one and only Grover Norquist, the president of Americans for Tax Reform, coming up live later this hour. But first, on your money, the markets, the economy, and the whole works now. Joining us live, veteran market strategist BRYAN Perry at BRYANPerryInvesting.com, also author of the 25% Cash Machine. BRYAN, thank you very much for taking the call here this afternoon.
Wonderful to be with you, Frank. I mean, you laid it out pretty well there. The market here is, it's rates, and we're going to have the Fed's going to meet next week. There's an 87% chance probability that they will cut rates by a quarter point. And the market's already trying to warm up to the idea that they will also cut again in January, depending on inflation, obviously. And those are, you saw those numbers come in the PCE today, right at forecast here. So, and also, it looks like the e-commerce is up again here for Christmas here. We had a record, Black Friday and Cyber Monday here, sales. So looking for, a healthy showing by some of the retailers here going into the end of the year. And it's, again, it's the consumer. We've got gasoline prices as low as $2.50 in Oklahoma now. And, so that's something that is really catching a lot of people's attention here. Is just there are some inflationary factors here, which is still sticky, but then there's some other things that are coming in, which is quite nice. There's been some decent, healthy sector rotation here of late. It's very, very welcome development here because, we've been the Mag 7 has led the market for most of the year, but the top 10 holdings occupy 39% of the total weighting for the S&P 500. Okay, it's that top heavy. So I like the idea of maybe looking at the equally weighted S&P 500. That's where all 500 stocks have the same weighting here, and that symbol is RSP. That's Romeo Sierra Papa. For those out there that may want to take a look at doing, and that looks like that's breaking out. So I'm excited to see that, because it's just not all about the AI trade. And we saw how fragile that is when there's any kind of hiccup, in the AI trade. It just really comes in hard. And so to see the oil services sector picking up, industrial metals here, for instance, copper is near its all-time high. And that makes some sense here, because the copper is implied in data centers, the electric grid build out, the EV market, construction. So no surprise there really. But biotechs are on the move, and also we've seen that happen as well. That the healthcare sector got a wake up call. So we are seeing, and even travel. Some of the travel stocks very spotty, but names like Expedia are breaking out to the upside. So you definitely want to be in the picks and shovels types of trades here. Not everything's working, but there's enough that is, Frank, that I think it's going to be a pretty good finish to the end of the year here. We've got right now as we come into this the weekend here, Nasdaq's up 22%, S&P's up 16.8, Russell's up 13.1, and the Dow's up 12.7. So it looks like we're going to do well here, and the S&P has a shot to hit 7,000 by New Year's Day.
On there live with veteran market strategist BRYAN Perry. Getting back to the Hollywood story here, Netflix stock closed down nearly $3 to 100 and change. That's the split adjusted price, which kicked in recently. Warner Brothers Discovery shares of $1.54 at 26.08, and Paramount Skydance, which was vying for parts of Warner Brothers, pulling back today by $1.46 at 13.37. Give us your reaction to this mega deal in the movie business.
Well, Netflix is, they're building their library out again. They won this bidding war, and for those that owned the Warner Brothers, Discovery, it's a double on the year. It was $12 about 6 months ago. Now it's 25, 26. So congrats to those that stuck with that trade. And this is kind of where the strong get stronger, Frank. I just think that Netflix here is, they're building just a war chest of content, and this is only going to add to it. They had HBO, they had HBO Max also along with this here. They're going pell-mell into sports, and this is also where you're going to at the same time you want to watch a football game, you're going to have a Netflix account in certain regions of the country. So I think they are really just well off the top, and I think people should maybe take a look at it in here, because after the split, it's more attractively priced for retail, but at the same time the stock was way higher than it trades today, and anytime you get a mega deal like this, it's going to weigh on the acquirer. But right here at around 100, there's a good support level here, and I think this is where people can start picking away at it. And like anything, you buy, if you're going to take a full position, buy a third, and then you buy another third, as a stock stabilizes and push higher, and then finish out your position here when the stock breaks back above 150.
On there live with veteran market strategist BRYAN Perry, and you follow the cryptos too, so let's talk about that for a moment. Let's get to the exciting stuff here. Been all over the place. It's been a nervous time in crypto land. Bitcoin right now back below 90,000 as we start this weekend. Give us your view of the latest moves in Bitcoin and the other major cryptos here.
Well, you've got certainly, the deleveraging, which took place here, because a lot of crypto was bought on borrowed money, and that just came unwound. And also you broke a key support level here at 95, 98,000. And that's, momentum begets momentum in both directions, Frank. So I think that, we did see some buying down here in the high 80s, mid 80s and all. So I think that this is probably, and after a big run like this, we had the Bitcoin doubled here, went to 135,000. And so a 25 to 30% correction is not out of it's not out of the realm of being what's called normal. But this is a speculative asset here, and people think that digital gold. It's not. Okay, it's very correlated to high beta trading with the Nasdaq here. So we have to just be careful, and it leads all the other altcoins, whether it's Solana, Ethereum. I mean, Bitminer, the Tom Lee's coin there. All this stuff is just been a complete wrecking ball that's hit this whole sector. Now, what people should just consider is, and there was institutional outflows too. All these hot ETFs that came out last year, or a year and a half ago, there's been some steady outflows there by institutions. So you just don't want to get in the way of that until you start to see, big money start to step back in. And, that's probably, I'm thinking, after the first of the year, because now you've got a lot of, year-end tax selling. You've got a lot of money made in the stock market, and then now you've had some, immediate losses here in Bitcoin and cryptos. So I think you're going to see some pair trading here where people are going to absorb some losses here, continue to sell into the end of the year with Bitcoin and the cryptos, and then book profits in their Mag 7 stocks and other names to try to, avoid the tax man.
What about these ancillary crypto-related equities? Strategy, for example, down more than 7 today at 178 and change. BITO, one of the ETFs, down 46 cents, down to 1321, and the list goes on.
Yeah, it does. And I am long, full disclosure, MicroStrategy or Strategy. It used to be MicroStrategy. Also Coinbase and well as Robinhood. I think that's the proxy that people should maybe consider before they just jump right back into Bitcoin. Look at these exchanges here, okay? And because they're going to make money on up and down markets, okay? Whether it's just about flow. And so I do like those three names. And then, well, for Strategy, that's a major proxy for just owning Bitcoin with Michael Saylor, being there. So if you're going to buy some Bitcoin in here, maybe take a look at MicroStrategy here, as an alternative to buying Bitcoin straight up. But I think the exchanges, Coinbase and Robinhood, are they're holding up considerably better than the coins themselves. And I think it's just a safer way to come at this sector here. People are like, I want to put some fresh money in the cryptocurrency area. Maybe buy Robinhood and Coinbase here to start things off.
All right, from digital gold to analog gold. Gold having a pretty good week. Looks like above 4,200 here, 4,227 at last check. Silver knocking on $60 an ounce this week, of $1.31 at 58.80, and platinum hovering at around 1,655. All three have had pretty much record-shattering run-ups, aside from platinum. That's well below its record high. But what about gold, silver, platinum, and the metals here?
Okay, well, gold, there's no reason to sell any gold in here because central banks are continuing to buy gold hand over fist because they're still printing a lot of debt around the world here, and that's it puts pressure on all fiat currencies here. So we're going to continue, and especially when rates come down too, because then current that also weighs on currencies and continues to put upward pressure on gold. Silver, I think, is probably a trade here in terms of it's come up, it's just gone parabolic here in the last 2 months. And it's an industrial metal to some extent, but it's just not the same, what I would call the storehouse of wealth that gold offers. So I would be, a seller of silver up in here, at least as a trade. Long term, you can hold it, but it's the SLV is the ETF that's most widely traded. That's trading up around 53, and you got a 20-day moving average at around 46. So it's elevated, Frank. And I just think that hold your gold and maybe trade some silver.
All right, the Mag 7 names. Apple has been hitting record highs lately. We've noticed that. It's down a couple dollars today, just about $2 at 278 and change. NVIDIA pulling back nearly 1 at 182.41. What about these big tech names, including NVIDIA?
Well, NVIDIA, they just did this large deal here with, I believe it was Synopsys here, which is a chip design firm here. They put another $2 billion into another, partnership deal, which pretty much validates what I think, the AI trade continues to go on. And then you had Apple here, which is now trading like a growth stock, even though they're going to really only grow by single digits. So, the valuations are stretched on Apple, I think, at this moment in time. For NVIDIA here, that's actually the second cheapest of all the Mag 7 stocks, trading at just 17 times forward earnings here at 182, chopping a lot of wood right in this particular area here. But I think it will emerge from this area and start to move toward 200 again. And then, price targets have been raised on this particular name here, to maybe 220 to 250. There's even one out there at 350. So I think that NVIDIA here is, as much as it's, in all the ETFs and all the different indexes and mutual funds and all that, I still think it looks like the least path of resistance is higher for the big name out there.
All right. Fed meeting next week. Any surprises expected? We got that inflation reading today and that some jobs readings coming in mixed this past week. What do you think the Fed is going to do and say next week?
Well, I certainly think that they've all, they pointed the way to a lower rate here coming in. But the probability of January of a cut is, it's only 25% right now. So, and that's down from 88%. So, this inflation read today really did impact, the bond futures market here about a January cut. It just really, it is week to week when it comes to this stuff. And then you also had, you had Ulta, just hit it out of the park here, cosmetics, and the stock was the biggest winner on the New York Stock Exchange today. So, there's indications here that the consumer's not in his back shape. We have this K-shaped economy, and I think that they're going to speak to that, Frank. Where the upper 10% of the economy, which is driving the stock market, owns 88% of all the stocks out there, is doing fine because they're seeing their real estate appreciate, they're seeing their portfolios appreciate. But then the other 90% of the economy, is still paycheck to paycheck for the most part. And there's a lot of squeeze in labor markets right now. There's, they call it no hire, no fire, but I think some of the revisions that we're going to get here for labor are going to be downward again when these start to come out here, these forward labor numbers. So I would say that the Fed is privy to that, and they're going to continue to, try to not, lower rates immediately from the standpoint of this is, they're listening to the bond market, and we saw rates actually kick higher here this week. 10-year going to 4.139. So, there's, you've got this K-shaped economy here is important that the Fed does try to lower interest rates longer term because it's the borrowing costs out there that is really hurting people.
At this point, Bryan Perry, let me ask you the big question. Appreciate your thoughtful analysis here as always. Any specific places where you're putting money now and or taking it off the table?
Well, yeah, sure. Putting it on here, I think I started buying some Autodesk for accounts that I manage. ADSK, that's Apple, David, Sierra, Kilo. They're the leader in what is called computer-aided design software, and it's all AI-driven now. So all this infrastructure that's being built for data centers and for the grid and for the bridges and roads and waterways and all that, part of this, the several different bills that have been passed. They are the lead name in this area here. It paid around $300 a share, $305, but they had just great numbers. And I'm also buying, again, picks and shovels for the data centers here. You've got to have memory, okay, and you've got to have what is called NAND flash, a flash memory. And that's SanDisk, SNDK. That was a spinoff from Western Digital here. And that ran up to $300. It pulled back to $200. I started buying it down here, and it's starting to trade, back toward, technically it's around 227 as we speak. It was up $14 today. But that's blowout numbers there. And, they're looking at earning over $22 next year. So the stock's trading at, roughly 10 times next year's earnings. So I'm trying to find those types of names where they're still part of the big AI trade, but also where everyone has, they're an arms dealer. Everyone has to have memory. And so, SanDisk is one of the 2 or 3 names in that area with storage technology and, Seagate Technology and Western Digital. Also, SoundHound, SOUN here. That's an AI, pure play AI on voice activation, whether it's, automobiles or whether it's restaurants and now that's parking. So if you want to go to a Rams game, your SoundHound app will basically say, hey, Frank, there's a parking spot, over here. The first hour is free, and it's covered parking, and it's only 2 blocks from the stadium. This is really, the kind of stuff that I think people are going to be excited about. This is where AI really comes into play to help people's lives. So I like that very much. And coming off, I took the silver trade here for some accounts, and I think that's really, again, hold your gold and take a trade on silver here. And with the market being where it is here, it's kind of it's going to be a push higher here toward the end of the year. So I think that if you're going to do some tax selling here, give the market a chance here to continue to grind higher, and at the same time, try to avoid any of these pitfalls that people normally do, and that's trying to buy second, third tier names when really the first tier names are still where the money's being. That's where the money flow is right now. And I just think that names like Broadcom and NVIDIA and even laggards like Amazon and Microsoft, I think you're going to wake up here in the last 2 weeks of the year and have a nice finish to 2025.
Terrific, Bryan. Thank you very much for taking the call here. We wish you and everybody there a wonderful holiday season. Hope to talk to you before Christmas again. Bryan Perry, market strategist, veteran market strategist Bryan Perry at BryanPerryInvesting.com, also author of the 25% Cash Machine. Bryan, it's always great to have you with us here. Thank you very, very much for taking the call this afternoon.
Always good to be with you, Frank. Thanks very much. Have a great weekend.
Thank you. Thank you very much. Out to the freeways we go now on 790 KABC.
AI agents are everywhere, automating tasks and making decisions at machine speed. But agents make mistakes. Just one rogue agent can do big damage before you even notice. Rubrik Agent Cloud is the only platform that helps you monitor agents, set guardrails, and rewind mistakes, so you can unleash agents, not risk. Accelerate your AI transformation at Rubrik.com. That's RUBRIK.com.
Kevin Harlan here. The NBA on Prime Crew is back, and the quest for the Emirates NBA Cup is center court once again. Group play is over. Now the remaining 8 teams do battle in the knockout rounds, and Prime is your exclusive home for all the action. It all starts with the quarterfinals. 2 consecutive nights of can't-miss NBA doubleheaders this Tuesday and Wednesday night. If you're not a Prime member, sign up for a 30-day free trial to get started today. Restrictions apply. See Amazon.com/Amazon Prime for details. The Emirates NBA Cup quarterfinals, Tuesday and Wednesday night, only on Prime.
U.S. soccer. Reality says the odds are stacked against us. To think our U.S. men's national team can ever raise the world's biggest trophy. Be the first soccer team to beat them at football. Never. But here's the thing about us. Refusing to accept reality is kind of our thing. Being unrealistic, that's not a flaw. It's a force. It's fuel. Because if you want to be great and make history, never chase reality. Join U.S. Soccer Insiders today. Be part of the journey.
Mottek On Monday continues, 790 KABC, wrapping up the day and the week with a winner here. The Dow up 104 points, selling at 47,955. The S&P 500 of 13 at 6870, and the NASDAQ of 73 points at 23,578. The yield in the 10-year note is shot higher. Gold also has seen a big week, right now at 4,227 and change, down about 15 here today. Silver has been on the rise this week, getting close to $60 an ounce, moving to $58.80 here today. And platinum at $1,655 and change. Shares of Apple hitting record highs recently, pulling back by nearly $2 at $278 and change. Nvidia pulling back nearly $1 at $182.41. The price of oil is just above $60 a barrel here at the moment. Bitcoin right now back below 90,000 at 89,275 at last check. Ethereum above 3,000 at 3,024. Doge at the moment at 14 cents. Big deal in Hollywood. Everybody's talking about it. Netflix buying some of the most important assets from Warner Brothers in a deal valued at $83 billion. Netflix shares down nearly $3 at $100.24. Warner Brothers Discovery of $1.54 at $26.08. Paramount Skydance, which was vying for what Netflix just bought, pulling back $1.46 at $13.37. And now the latest news on 790 KABC. Mottek On Monday continues here, 790 KABC. Inflation reading coming out today. First thing this morning, that's the core inflation reading watched by the Federal Reserve. They'll be focused on that at their big meeting next week. It's now widely expected the Fed will be cutting rates by a quarter percentage point, but as our top market strategist BRYAN Perry noted, looks like the chance of a January cut have declined. In the meantime, what's happening on the tax front? Well, that big, beautiful bill that was pushed by President Trump and passed by Congress will soon be kicking in. Some very important parts of it will be kicking in very shortly, and keeping an eye on that along with everything else that's happening on the tax front and what's going on in Washington. Joining us live now is Grover Norquist, the president of Americans for Tax Reform. Grover, thank you very much for taking the call here today.
Absolutely. Good to be with you. We have cheerful news for people paying their 2025 taxes.
Yeah. Well, that's good to hear. We need some holiday cheer here, especially when it comes to taxes. It looks like some big refunds are coming, right? You did a great write-up at your website, atr.org. Big, beautiful bill will deliver largest tax refund in history. Take it from the top and tell us about that.
Well, the reason is there are a lot of tax changes. If tips are part of your income, 2 million, 2.2 million Americans, our waiters, our waitresses, we have 700,000 bartenders, 200,000 people take care of pets, another couple 100,000 people do fingernails and do beauty salons and barbershops. If you work on tips, the first $25,000 is not taxed. And that is true whether you're an independent contractor or an employee, whether you work in a group and you pool your tips or you get them individually. But the law didn't pass until July, but it took effect all of last year. It's not like, it didn't delay the tax cut halfway through the year. The Republicans said, we want everyone to know. Make your decisions now because we're cutting taxes and you will start paying lower taxes a year ago, January a year ago, not halfway through the year. So per child tax credit grew, your individual exemption grew, rates are down, the small business tax rates are down. Expensing, very important for small businesses and big businesses to make us more productive so we can get paid more. Those things are all taking effect. But this year in particular, because so many of these tax cuts are new, the tax cut for people on Social Security, all of these things people aren't necessarily used to. And so they probably overpaid. That's what the IRS is suggesting. And they will see bigger than usual tax returns.
See it tonight, read about it tomorrow, but hear it now on Mottek On Monday. On the air live with Grover Norquist, America's leading taxpayer advocate at Americans for Tax Reform. ATR.org is their website. So this the big beautiful bill's full business expensing provisions. You're speaking to the business audience here. Tell us exactly what that translates to.
Well, what it means is when you buy a new computer to make your workers more productive, a better truck, new plant and equipment, that gets expensed immediately. Under the old rules, you could depreciate it over 10 years, 20 years, sometimes 30 years, which makes buying new equipment and new investment to make workers more productive, which is how you get wage increases, you'd be taxed on it. Right? The guy says, I just bought a truck for $1 million. Well, we're going to tax you on the $1 million. I don't have the $1 million. I bought a truck with it. Under expensing, the $1 million, you don't pay taxes on that because you spent it. The money's invested. Now, when you get more productive and you get make more money as a result, you can get taxed on that because the company's being more productive. But you don't tax investment. You want to not tax investment, and that's what the Republican tax cut does. So, and we're seeing a lot more money being invested, not just the stuff where President Trump stands next to some world leader who's saying, I'm going to send $1 trillion of investment in the United States over the next decade, but small companies too, medium-sized companies, all throughout the world and the country are making investments because we're no longer punishing people for making investments.
Everyone's saying what a fast year this was. So much has happened, and certainly this big, beautiful bill, very, very important to everyone. Had it gone the other way, we talked about this leading up to the election, and since then, of course, it would have been just the opposite of what you're talking about here now, right?
Imagine what the price of gasoline would be if we'd continued down the path of making all energy more expensive. Imagine how American products would be priced out of world markets. Right now, it's the Europeans who went crazy on all this green global warming stuff, and they shut down their coal and their nuclear and all of their and energy from cars and natural gas. They just got nuts, and to the point where they're so expensive to build anything in Europe these days. That's not the case in the United States. We've started to do a U-turn on that craziness and move in the right direction. So not only are incomes growing this year for Americans, as opposed to the 4 years of Biden where real incomes fell because of inflation and low growth of wages, we're back to period of growth. When people talk about whether things are affordable, there are two questions. How much does it cost? And what's your income? When incomes are going up, everything's more affordable. And incomes in the United States across the board are going up. And we're beginning to see real stability in prices. A lot of the changes that were made when the president was negotiating with tariffs, those are now settled. And so we no longer have the uncertainty of those ongoing issues, and that helps too. So the next year looks good, and as we were talking, a lot of people are going to get bigger tax returns than they were expecting.
All right. Well, happy holidays. A lot to celebrate this holiday season and heading into 2026. That is very good news. So thank you very much for that, for lifting our spirits here as we head into this weekend. Grover Norquist, President of Americans for Tax Reform, America's leading taxpayer advocate. Again, the website is atr.org if you want to take a closer look at what's going to happen here with this big, beautiful bill and all the different provisions that'll be kicking in very, very soon. Grover, we wish you a great weekend and a great holiday season and hope to speak with you again very, very soon.
Absolutely wonderful.
Thank you. Thank you very much. And the stock market moving higher today with the Dow up 104 points, S&P 500 up 13, the NASDAQ up 73. Let's get the latest on your ride now here on 790 KABC.
U.S. soccer. Reality says the odds are stacked against us. To think that our U.S. men's national team can ever raise the world's biggest trophy. But refusing to accept reality is kind of our thing. We chase greatness. We chase legacy. We never chase reality. Join U.S. Soccer Insiders today. Be part of the journey.
Hi, I'm Drew Barrymore, and I want to tell you how you can help to support the life-saving work of St. Jude Children's Research Hospital. When you give, you're helping ensure families never receive a bill from St. Jude for treatment, travel, housing, or food, so they can focus on helping their child live. This holiday, help St. Jude give children the greatest gift, a chance at a lifetime.
This holiday, help St. Jude find more cures for more children. Donate now at musicgives.org.
Get ready for The Rush with Max Crosby.
You already know what time it is.
All-pro defensive end Max Crosby takes you beyond the field with exclusive insights, real stories from inside the locker room.
You could literally see us like laughing, kind of chirping back and forth.
This is The Rush. Buckle up.
We talk about The Rush on The Rush all the time.
Don't miss the behind-the-scenes moments and interviews everyone's talking about.
We appreciate you guys. We're going to keep feeding you all the content.
Follow and listen on your favorite platform.
Here we go.
Mottek On Monday continues here in 790 KABC. A record-shattering year for stocks, gold, silver, cryptos too, as 2025 winds down. The Fed back in focus with an important meeting next week and big changes ahead in the new year. And joining me now to discuss some of these epic milestones this year and look ahead, I'm delighted to say back with us today the biggest name in the world of economics and finance, economist Dr. Mohamed EL-ERIAN. Chief Economic Advisor at Allianz, former president of Queens College, Cambridge, former head of PIMCO in Newport Beach, and author of numerous books, including one focused on the Fed, titled The Only Game in Town, Central Banks' Instability and Avoiding the Next Collapse. Mohamed, thank you very, very much for coming to the line here this afternoon.
Thank you for having me, and thank you for the kind introduction.
Thank you very much, Mohamed, and what a year it's been with record highs in so many areas here. Give us your thoughts here as 2025 winds down.
It's been an amazing year, both because of what did not happen and what did happen. In terms of what did not happen, the U.S. tariffs did not provoke a trade war, a global trade war. The U.S. ended up getting exactly what it wanted. And second, what did not happen is that the U.S. consumer did not buckle under the heavy burden of high prices, high debt. So these two things meant that the macro context was much more accommodating for all financial assets. And then we have what did happen, which is amazing progress in artificial intelligence that promise us one of the biggest productivity gains we have seen for many, many decades. So it has been both an unusual year, but also an encouraging year.
And one big headline after another, which seemed to drive all the action here with the Federal Reserve now back in focus in the week ahead. We've seen quite a wild ride on the Fed expectations for a rate cut. Next week, we will get that decision. What do you think is going to happen next week?
So wild is the word. It was unthinkable that in the 5 weeks before a Fed meeting, the market expectation of a Fed action, in this case, a rate cut, will go from 90% all the way to below 30% and back to 90%. But that is what happened. I think that the market is right in pricing a 90% probability that we get a cut next week. But it will be what they call a hawkish cut, in the sense that the Fed will not commit to follow-up cuts. Instead, it's going to say, we're doing this one, and then we're going to wait and see what the data tells us.
Taking a look at the precious metals actions for a moment here, with gold hitting a record high, silver around $60 an ounce. And what's driving the precious metals run up here? And what are your thoughts on the strength of the dollar and the Fed's role in all this?
The major driver behind the precious metals is foreigners in particular wishing to diversify at the margin from dollars. And this is led by foreign central banks who are taking some of their reserves and moving them into gold. And then the second is institutional adoption of gold in particular as a safe asset. For a long time, the mantra was don't buy gold. It doesn't pay any income. Buy U.S. bonds and they will be your safe assets. However, people have now realized that with all the questions about U.S. bonds, our deficit, our debt, foreigners' willingness to hold it, that gold belongs in an institutional portfolio. And you've seen much more institutional adoption of gold than we have in the past.
On the air with Dr. Mohamed EL-ERIAN, and we've been having these conversations since the dawn of the crypto era. We've been following this closely with you and this evolution, and we've seen Bitcoin hit record highs this year and then a dramatic pullback, and now it's been bouncing around lately. What about crypto at this point? What are your thoughts on crypto and the pro-crypto administration currently in place and crypto's role in the financial world at the moment?
The long-term good news for crypto is that we are seeing a administration that is more favorably inclined towards crypto. And second, we're starting to see a lot more adoption by longer-term investors, what we call steady-hand investors. The bad news for crypto, and we've seen it, and that's why the volatility has been so large, is that there are a lot of what we call tourist investors, people who come in and out all the time, as opposed to resident investors, people who hold for the long term. And that explains the volatility, that explains the speculation. So the long-term holders of crypto will like the fact that institutional adoption is spreading. You just have to absorb a lot of volatility.
On the air with Dr. Mohamed EL-ERIAN. Looks like the Federal Reserve will have that big news conference next week and the announcement, Fed Chairman Jerome Powell, one of his last news conferences and statements on the economy. Looks like there are 5 people on the short list to replace Fed Chairman Jerome Powell, and looks like a lot of buzz around Kevin Hassett currently, the current director of the National Economic Council, very close to President Trump. What are your thoughts about who will be the next Fed chair?
So the president has signaled, but not confirmed, that the front runner is Kevin Hassett. The betting markets have him at about 72% likelihood, so that's quite high. The good news for us is all 5 on the short list are highly qualified and highly experienced for this job. So I think at the end of the day, it won't matter that much who we get, but what we will see is that all 5 know what I think most people recognize, is that you need urgent reforms to how the Fed operates. We've had mistake after mistake made by this Fed. So we should expect some pretty significant reforms to how the Fed operates.
All right, one change would, if Kevin Hassett takes it, he would be an economist, right? Unlike Fed Chairman Jerome Powell, who's an attorney by profession.
Correct. 4 of the 5 are economists, and there's a lot of excitement that we will have finally an economist at the helm of the Fed, as has been the case historically. And I think that matters because you are at the head of an institution that has the most PhD economists, that does a ton of research, and you've got to be able to impose your authority and gain the respect of the people working for you. And that's very hard to do for people who are not trained as economists, let alone people who don't have a PhD in economics.
One wild card that's on the horizon involving the legal profession is the Supreme Court ruling we're expecting any moment now on whether President Trump's tariffs are indeed permitted and the possibility that the Treasury may have to refund $1 trillion. What are your thoughts on that big question still hanging out there?
Yeah, it's hanging out there along with the second one, which has to do with one of the Fed officials, Lisa Cook, who was accused but not proven of financial irregularity. Both are important, and the market is keeping an eye on both. Of course, it's very hard to guess. If it turns out that the Supreme Court judges that these tariffs were not legal, I think you will see two things. One is that the Supreme Court will give the administration time to pass the legislation that's required. And second, the administration, I suspect, has Plan B and Plan C that they will implement while they get legislation passed. So I don't think it's going to be returning all the money to the companies that have paid it. And of course, the president has floated the idea that maybe we should all receive checks for $2,000 as a tariff dividend. I don't think that's like a 50-50. It's a coin toss whether we get it or not. But what's not going to happen is I don't think the companies will all get back the tariff revenues they've paid.
And last but not least, your outlook for the economy in 2026.
I think the baseline is that this economy remains solid, driven mainly by AI-related expenditure on data centers and all the other enablers. This is a real phenomenon that is building quite a bit of momentum. I suspect inflation will remain about 3%. And the two big risks are, one, that the bond market decides it doesn't want to absorb all the issuance that governments around the world are doing because of high debts and high deficits. And the second one is that somehow the truce right now with China on tariffs breaks down. Those are the two risks, but the baseline is continued solid growth. Inflation stable at about 3%.
Mohamed, thank you very, very much for taking the call. As always, wish we had more time. Hope to see you back in Southern California as soon as possible. We wish you all the best this holiday season. So tremendously grateful to you for all these great conversations over the years. Thank you very, very much for joining us here this afternoon.
Thank you, and wonderful holidays to you and everybody listening. Thank you.
Thank you very much, Dr. Mohamed EL-ERIAN, Chief Economic Advisor at Allianz, former president of Queens College, Cambridge, former head of PIMCO in Newport Beach, and author of numerous books, including one, as I mentioned, that's focused on the Fed, titled The Only Game in Town. Dr. Mohamed EL-ERIAN here on 790 KABC. Wrapping up the week with a winner on Wall Street, the Dow up 104 points at 47,955. The Dow finished the week higher, marking its second consecutive week of gains and getting close to its all-time high, which was above 48K just a couple of weeks ago. The S&P 500 of 13 at 6870. The Nasdaq gained 73 points at 23,578. The Nasdaq positive for the ninth session in 10. The S&P 500 up for the fourth day in a row, also near record highs. Stay tuned now for the News Blitz with Randy Wang. I'll be back with more at 4 Monday here on Mottek On Monday, 790 KABC.
Hi, I'm Drew Barrymore, and I want to tell you how you can help to support the life-saving work of St. Jude Children's Research Hospital. When you give, you're helping ensure families never receive a bill from St. Jude for treatment, travel, housing, or food, so they can focus on helping their child live. This holiday, help St. Jude give children the greatest gift, a chance at a lifetime.
This holiday, help St. Jude find more cures for more children. Donate now at musicgives.org.